The biggest theme is that they've taken the greatest exposure to the market since in a year. It's still not actually to historical average levels, so still below in that sense. So it's still a market that everybody's cautious about. A couple of things that really drew my attention, though. Number one, if I look at the buy side, Disney just continues to be something that our clients are so interested. They continue to buy that stock. They continue to buy Microsoft. But one that they also bought on the sell-off we saw last month was McDonald's. And then the part that actually drew my attention the most, actually, Wolf, is what they sold. And, you know, you see on the screen now some of the things they bought. And what they sold also was interesting because it was stocks that are either at 52-week highs or at multi-month highs. Citigroup, Bank America, Netflix, Tesla was actually sold 3 of the 5 weeks of November, as you know, the stock started to rally to a level we haven't seen since last January, and our clients sold it. They've been big buyers of it, you know, for the last year or so. So I thought that was also very, very interesting to see Tesla get sold while you see Ford coming out with the electric F-150 being purchased at the same time.
I also see that you broke out what millennials bought, in particular Virgin Galactic Holdings and Canopy Growth Corp. Ian, tell me what you think of those picks, and do millennials know something that Gen Xers don't?
I don't know. Maybe they think we're going to space sometime soon, but I mean, that should be a little concerning, right? That millennials on their phones are buying marijuana stocks and sort of, no pun intended, moonshots. JJ, is that concerning at all?
No, it's not concerning to me at all, and here's why. Let's look at time frame. They have a longer time frame, and so in first of all, you know, if you look at Virgin Galactic, it's the only way to actually purely play any sort of space move overall. As far as Canopy Growth, you know, again, I think sometimes we get a little caught up in the nearer term. If you're somebody who's a millennial, I would think that the view is that in their lifetime, that federally, this will be something that is passed. So it may make sense. You also have to remember these are, you know, it's an inexpensive in terms of price stock. And so if people are putting part of what they have to invest, because the rest of their investment portfolio looks very much like a boomer's portfolio. So to have some of your portfolio on things that you think that you have 10 or 20 years of growth opportunities, I actually think that might not be the worst idea in the world for somebody of that age, which would certainly be different perhaps than so I want to be clear that most of their investments are very much the same as the older generations, but it's okay to put things that you think are going to be worth a lot of money sort of in the future.
JJ, did cutting commissions to zero make a big difference in volumes? Or even more importantly, to account openings?
Well, it certainly led to both. You know, the volume's been up, Wilf, but I think the other thing that's happened is that the educational interaction has also been up pretty significantly. So when I see both of those together, that makes me feel very good. Yes, our account openings have been up also. So I think there was this fear when commissions went to zero that right away the whole world would go crazy. And so, you know, we haven't seen that. We have seen some people pick up their trading activity, which is fine. I would always compare it to, you know, if every company went free with coffee, you might have an extra cup of coffee, but you're probably not going to go drink 22 cups of coffee. And you know, that day. And so we're seeing the same sort of thing with trading. And more importantly, as I said, we have seen our educational offering that has certainly increased participation from our clients, and that I think makes us feel the best.